Okay, welcome back, everybody. We're going to begin our next panel, Real Estate Startups, Where to Begin. And to introduce the panel is Kevin Gray, one of our co-chairs here at the conference and on our YaleAREA conference committee. Please welcome Kevin Gray.
You know, I'm so excited to be having this panel on startups. And by the way, this is not a panel about prop tech. This is a panel about starting up and where to begin. And you know, real estate is such a tradition-bound business, whether you're a lender or certainly in the building trades, very slow to adapt, very slow to innovate. I sometimes think things went faster in the 19th century because there were no zoning laws and no regulatory, and all you had to do was shake hands and build something and bribe somebody. So what's great about our 5 guests, 4 of whom were my students, is that they've all, in totally different areas, figured out a new business idea, a new business proposition, and they've taken it all the way to reality. And it's just, to me, an act of incredible bravery or foolishness or whatever you might describe. Thank you. But I'm going to introduce each of them, and they want to pitch their own business. So I said, yeah, you can tell us what you do, but I'm not that interested in your actual business. I'm much more interested in the process that got you there. But first, I want to introduce, let's start at the very end, Ira Shaw, who is started a company called Partner Solutions. He's in the secondary market. And then Andrea Pizziconi, who is building dormitories in Africa and has figured out the way to insure around risk in places where nobody has been able to successfully make any money. Nobu is from Agya Ventures. He and his partners from Yale College have started a startup fund. Carl and his partner, Star Childs, who can't be with us, started Gingko Citiesense here while at Yale to really help municipalities get developers involved and make it more easier for a developer to invest in cities. And finally, last but not least, Sumit and Aneja, who started a search fund accelerator that often included looking at property with real estate as a component. He now bought one of his companies. It's not a real estate company. But with that in mind, I'm going to just start with Sumit and ask you each to very briefly explain your company. And then I'm going to ask you some really personal questions, okay?
This is the venture for that, sure. Let's do it.
So here's Pivoton. Take it away, Sumit.
Yeah, thank you, Kevin. So Pivoton Capital, I found the company in 2018 with the intention of acquiring recurring revenue businesses. What that means is these companies have long-term contracts, annual, multi-year, et cetera, with a steady stream of cash flow coming in no matter what, right? So economy's in recession or whatever. So we're looking for recession-proof businesses, recurring revenue, high gross margins, high profitability. Well, that doesn't happen anymore in tech, but I'm okay with that. We acquired a company called Group Voxco in Montreal. It's a survey software company. And we've done a couple of growth capital rounds with the existing investors, and we acquired another business intelligence company called Actify Data Labs, now rebranded as Voxco Intelligence. I wouldn't spend too much time on it, just a brief introduction.
Right.
Okay.
Thank you. Okay, Carl.
All right, yeah, so Citiesense, that's the homepage right there. Co-founder, if you need anything from him, he's there to help you. But it came directly out of our time here at Yale. And I guess the second piece would be our professional experience before we came here. But Star was in the School of Forestry, and he had been working on a lot of land use related issues. Took a class that I was TAing for and turned in an assignment where he had 2 versions of a map for a zoning proposal. One of them was done in, it looked like crayon at first, but it was actually color pencil done very nicely. And then the other one looked like actual garbage, like somebody had scribbled all over it, and it was because he had used GIS to print out the second one, but the two map layers, the map layer and his drawing coordinate systems were incompatible. So from that conversation, it was very cool what he had done, but it seemed like there had to be an easier way. And he ran with that all through school, looking for better ways to streamline that process and just make it easier for somebody who wasn't an expert. And so he, the initial thing was he applied to YEI with this project and got in and launched it from there.
Yep, thank you.
That was 2014.
Great, thank you. And now Nobu?
Yeah, sure. Professor, great. Thanks for inviting us. Great to be here. My co-founder Kunal and I are both Yale College graduates, 2011. We were actually also section mates in business school. In 2019, we got together. I was at a hedge fund at the time, and Kunal was doing something else. But we got together and had a discussion about starting a venture capital firm focused on real estate technology. Fast forward to today, we just closed Fund 1 of $32 million, investing in early stage.
Did you said 33 million?
$32 million, right. Real estate technology focused venture capital firm based in New York. I'm in New York, and then Kunal is in SF. So that's
okay. Yeah. Thank you, Andrea.
So I am a serial social impact investor and entrepreneur and founder. I cut my teeth actually here in New Haven. I've been able to catch up with some old friends. I started everything working at Yale Properties and being part of those years of revitalization of New Haven, which is ongoing, but started doing the New Haven revitalization in '99, and then spun off and did my own projects in New Haven, and then skipping a very long story, my niche was education infrastructure development. And so we are one of the preeminent companies that does public-private partnerships. We invest in university infrastructure, kind of like what Yale's doing here in New Haven, but in Accra or in Nairobi for universities, public universities, and our niche is really in the structuring of it. As Kevin mentioned, it's in the downside risk protection. It's the way that we swap out emerging markets risk for developed market risk with currency and with default risk and credit risk. And then in the most recent venture, because when you develop in emerging markets, you kind of need to sometimes curate both the supply and the demand side. We now are venturing into financing student loans for girls to address other social ills that happen, including the sexual exploitation of girls to pay their school fees. And that is very much part of the real estate structuring because it allows us to have some control over the cash flows, the currency complexion of the cash flows, and when to turn them off when there's a default on the other side.
Thank you. And Ira.
Thank you, Kevin. So I've worked in real estate since 2006 when I graduated SOM, and Kevin pointed me in the real estate direction and screwed my head on straight. And as he noted, I worked in real estate secondaries. Secondaries is buying positions in real estate funds, private equity real estate funds. When an investor is looking to exit, there's a small universe of buyers that will buy in at a discount. A year and a half ago, I left my prior company to start a new business called Partner Solutions. We're backed by Crow Holdings out of Dallas. We operate in Boston. What we do is a little bit different than the secondaries model. We still look to address problems that happen within real estate partnerships, but we'll work closely with GPs and investors and developers to help scale their platforms, address any partnership liquidity issues they're dealing with. We'll get more close to the real estate, but we're effectively investing through other operators. And I co-run this business with my business partner, Gina Spiegel. So we launched this together a year and a half ago.
Thank you, Ira. So I wonder if I can go backwards. Yes. So you can see that this group of entrepreneurs really, they don't overlap at all with each other. And I think it's very exciting from a real estate standpoint to see the different niches you can have. But now I really want to get personal with you. So I want to ask each of you this question. Which came first, the idea that you really wanted to have your own company and not work for somebody else, or that desire, or that you came across an idea that really the only way you could implement it was to start your own company? I'd like to know, what was that, where to begin? That's why I call this Where to Begin. So Sumit, you want to go first?
Sure. Yeah, I think before coming to business school, I was at International Monetary Fund, and I was very clear that I wanted to get into investment banking right away. Leslie, we remember the miserable days, right? So that happened. It was a great experience. I loved it, but I knew I wanted to start my own company at some point. In fact, if you remember the shaving startup that I was doing here.
Yes, shaving startup. I do remember that.
Art of Shaving was bought for $1 billion, so we were on the right track. But again, going back to the point, I wanted to start something. I was involved in the family construction business before IMF also. So it was just a matter of time to get some experience, get some investors. In fact, before I left Houlihan Lokey from Bank of America, then I already had 5 investors locked in. So they were like, we're going to support you. Go ahead, find a company that you can invest in and spend your 5 to 7 years. And that's how I started.
Okay, that's great. That's great. And Carl, you were a graduate of both SOM and the School of Architecture.
Right.
And at what point did you decide you wanted to join? What made you want to join STAR and really completely?
Yeah, I think coming from a background in architecture, I always knew that eventually I would have to launch my own, whether it was myself or with partners, go out and do our own design firm. But you have to get a few years of experience first. And so in the course of doing that, I ended up switching over to the real estate development side. And having that experience before business school and working with STAR, it was a very natural fit where we were constantly talking about the same issues. We, like I said, crossed paths in that class at the architecture school. And then actually after he did YEI,
which is a Yale
Entrepreneurial Institute, right?
With a grant,
Starting with a small grant from YEI, he cobbled this thing together into a very rudimentary prototype, but he came to this conference in 2014, and that was where we met up again. He had graduated. I was still here, and I was very surprised that he was still working on this thing after having graduated, but that was what got the conversation started. And so I think it's similar to some others. It was always a little bit of, I know that somewhere in my future is doing my own thing. But in this case, it was really, we just felt, we both had experienced very directly the pain of not being able to, take information about the city, the data that mattered for development, architecture, city planning, whatever, and be able to actually tell stories with it, visualize it, and ultimately analyze it to make better decisions with.
Okay, how about you, Nobu? Which came first, the desire to have your own company or the idea?
I think there's like a similarity in the sense that for a while I've wanted to start a company and do something, but you just can't start a company, without an idea. And you also can't have a bad idea, right? And so I think that thought has been within me for a while. And then Kunal and I had talked in 2019. He first came up with an idea of real estate VC of some kind. And we had a few discussions that evolved into what it is today. And so I was not thinking, let's do a real estate VC. Certainly, when I was here, I didn't take your course because I was a chemistry major. And, didn't know anything about real estate and was not interested in it at the time. But I think the kind of merging of the two of having the desire to start something, and then opportunity came across, and then opportunity in terms of people. Kunal and I, we're part of the same, again, class of Yale, and also in business school. But then we had an opportunity to meet and discuss, and it seemed like a good idea to do it together. And then there was also like a macro factor at play. It seemed like a good thing to start at that time. So like everything coming together during that time with that particular idea.
So you were kind of shopping for an idea, it sounds like.
Well, I had bad ideas here and there, but I think like in some ways you could say that, I think you were kind of thinking you want to start something, but then you come across a good one. Again, it's an idea, but also it's like the people, everything coming together.
Okay. Andrea, where to begin?
I don't know how to answer this question because I thought I knew the answer when you asked last night, and I don't know now. When you are from an underrepresented group of any kind, when you don't look like the majority in your space, then, as they say, make your own table. And there is an element of that in this story. My dad was an Italian-American engineer working for Kodak, which was a big company back in the day. Some of you might not remember it, but and he was discriminated against greatly. And so when I was a child, I do remember my father always saying, "You got to have your own company. You got to have your own company." Because first day at Kodak, he said, they told him that no Italian would ever be the head of the department. And then they told him that the mafia didn't belong there or something, And so I grew up with this kind of like on my shoulder that maybe I would have a tougher time. But on the flip side, my mother was an urban educator, and it was very instilled in me that education access is a game changer. We are so privileged to be sitting here in this incredible facility and having this conversation, and our lives have been transformed because of that opportunity. And I wanted to do that. I wanted to propel what she had started as an inner city elementary school teacher. But the reality is that I couldn't get anyone to do what I wanted to do, other than arguably Yale Properties, who had a huge endowment. And so I was constantly thinking, well, what does the rest of the world do when they don't have a huge endowment? And so we've got to solve the problem for them. And so I did have to make my own table, and so I had to create my own company. And I've actually never applied for a job. So maybe the answer to the question is there, that, because I've been an entrepreneur for so long. The only W-2 I ever had was at Yale Properties.
Great.
I think for me, the decision to start something of my own started with an idea. Having worked in a sector for, my last position, I was there for 13 years. I hit a point where you see that there's an opportunity to expand the business, to change how we operate. The world changes, and we had a business idea. There were additional ways to provide capital within real estate that we thought would be attractive to investors, and the company we were working with was not really looking to move in that direction. There was just a whole lot of inertia that I think when companies and asset managers in particular get too big, it's hard to change. And then you layer onto that just the way that any investment partnership deals with alignment and how equity is allocated and profits are allocated. And so, I think most of your career, you think about, or at least for me, you think about job and salary, base and bonus, any other incentives. And then when you start to see the bigger picture later in your career, where there's another layer of equity incentives and how that shapes decisions, and I have an idea. I don't like the way equity alignment here works, and so I'm going to go start it on my own. Just need to go find capital to back me.
But that raises a question for all of you, is that you're kind of walking a tightrope without a net. I mean, you have to make a living. You've got 3 kids, don't you? At some point, doesn't that practical aspect, isn't that why most people work for someone else? To get a paycheck. And is there a period of time when you didn't have any revenue? And was that a big fear factor for you? I'm going to ask Sumit first.
So I was fortunate because I went on this search fund path. Just for everybody to know what that is, it's about setting up a fund with, let's say, 10 to 12 investors. You go look for a company, acquire and operate it. So the investors are funding your salary also in the time period when you're looking, right? So fortunately, I did not go through that time period other than the 3 months when I was raising my fund and closing it. But even that time was pretty, it is stressful, I have to say, with the student loans and everything. So I was fortunate to be able to close that chapter and then go on that journey. And then once you acquire a company, of course, the equity incentive is big enough for you to take that risk. There's a risk-reward ratio that exists for a reason. I'm a firm believer in that. You have to take risk too.
Well, as long as you have enough credit on your credit card, right? You could start a company with your credit card. So
exactly.
Is that what you did, Carl?
No. No. It was, the key, I think, was getting a little bit of runway during school. Because like I said, Star graduated a year before me and was, kind of tweaking it to the point where who could we sell this to, right? Like that was the first step. And cities made a lot of sense, like municipalities, because I don't know, a lot of people in the room might remember Oasis NYC. That was a source you could go to find out parcel info from, on any property in the 5 boroughs. And it was very expensive to develop, and most cities couldn't do that. So that was where there was a clear need. And he actually was able to sell to several cities in Connecticut right around the time that I was, thinking about whether to do something in this space or not. We worked together. There was revenue, but it wasn't revenue to speak of. I mean, nobody works on a tech startup and takes a big salary, not even a market rate salary. And so you're only working on it for the potential value that you're creating and the equity and, ultimately, hopefully better cities with the use of a tool like ours. So that, I think the satisfaction of, working with the customer group that we found, we ended up going to a few different ones, but the revenue took about 12 months, I'd say, after school to get to the point where we could, and we were hustling. I mean,
Where you could live off your revenue.
Yeah, and there were 3 of us as
That's
co-founders.
kind of scary, actually.
So the development also had to be funded out of, what we were bringing in from subscriptions. And so,
Right.
Yeah, but it was motivation too. So I think without that motivation, maybe we wouldn't have been able to get it off the ground.
Right. How about you, Nobu? You and Kunal and your other partner started this company, I guess, from scratch, right?
Right. So before starting the VC firm and then registering it, we had a period of time where we were running an advisory shop for the precise reason you mentioned, that we needed revenue. It's not a big, it's like a project by project, to be very specific, something like a 100K per month sort of advisory project. But that allowed us to at least go, full time on that without kind of having to worry about it. And I'd also have a child, and kind of that was a big consideration for sure. I think a bit of a scary moment also was right after we started, COVID hit, and obviously nobody wants to invest in a VC firm in February, March of 2020, and that was a little bit scary. We just got this small consulting project that going on, but then the VC prospect all of a sudden looked much much darker, right? So that was a bit of a scary thing. But I think ultimately we thought we had what it took to raise capital. We thought we had a good team. We thought we had a good idea. And also there's a sense in which I think there's obviously a risk in starting a business, but also there's risk in not starting it. In other words, if you don't start a business, and let's say that's your desire, not everybody has a desire, but let's say you have a desire to start a business, and if you don't start a business, later on there's a risk you regret, right? So for me, that risk also had to be factored in. And to me, even if it didn't work, I don't think I would have regretted it, because there's a calculated risk. And then there was also this risk of not taking a risk. So that's how I would put it.
Well put. Well put. Andrea.
I mean, Nasser Taleb would say that being the human resource manager at Goldman Sachs is riskier than being a taxi driver, right? Because you can control your destiny when you have your own company. And I think that I was staring at different risks than other people were, in the possibility that, something could happen to me as a woman that could eliminate my career within a corporate structure, and that I would mitigate that risk if I had my own structure. So that was a factor in terms of the risk. But in terms of revenue, I would love to say, like Carl did, that within 12 months we were sustainable, because that's amazing. But when you build large-scale infrastructure projects in Africa, then it's not within a year. Our projects sometimes take more than a decade to get done, but the upside is profound. I think many of my peers on the panel have mentioned the wealth creation from business ownership is a game changer, and it is profound. But I was certainly very blessed in that, well, I've only ever invested in ideas, other than the New Haven Revitalization, which is its own ecosystem and it has its own impetus. And there I had a bank that poached me from Yale and said, we'll give you equity if you go off on your own. And so like, who would say no, right? I was 24 years old. Sure. And that was equity, that was CRA money, so it was guaranteed by the US government. And this notion of using governments to guarantee risk, that's where it began, and looking for that same model elsewhere. But I've only ever invested in ideas that were completely aligned to explosive population growth, especially among youth. And so when you have those kinds of business models, it's only a matter of time. It's not like the idea is going to go out of style. It's not like the demand will go away in a business downturn. It's a race. It's a matter of, who's going to come up with the best structure first. And by the way, there are multiple winners. This is the only example where, it's like the toddlers that all do the marathon and they all get the #1 prize or something. Whenever I meet a peer that's in a similar space, the first thing I start by saying is, well, there's so much demand. We can be friends. We're not competing with each other. You go do your deals. Let me help you with your deals. I'm doing my deals. Let's help each other to survive, because by setting the precedent that these deals work and that they're bankable, that's where we can change the world. That's where we can actually transform millions of lives.
But did you have to go more than 12 months with no revenue?
I had to go many, many years without revenue, but I also had...
How do you do that?
I was blessed with an incredibly colorful group of angel investors. I was invested in by Khodorkovsky. I never met him, but they invested millions. I was invested in by Nelson Mandela's lawyer, Joel Jaffe, from the Rivonia trial, who declared at a conference that he would invest in me. So I was very blessed because I chose an idea where there was this larger interest in seeing a solution. There were people along the way, and we see this in Girls First Finance. Girls First Finance is, I saw a problem, which is 50% of girls are sexually transacting their bodies to pay their school fees in Africa, 15% in America, the sugar daddy culture. And I saw that and I thought, wow, that's really unsettling to me. And it turns out it's unsettling for other people too. And if women are willing to do that, then there must be a hugely, very resilient demand for an alternative form of financing. So I had money thrown at me, unsolicited. I put my own money in, but others started throwing money in too. So if you choose a business model where itself has legs that are resilient, then you might find that fundraising is a unique journey. That's what I found.
Good, great. How about you, Ira? You're different from the others on this panel in that you probably started your company later than anyone else has.
Yeah, I mean, listening to all the different answers, it sounds like the perspectives are, like, in some ways, each of the panelists felt that they de-risked their venture either because of the strength of their idea, their awareness of a problem. I think that certainly for me, I was confident that what we wanted to do was, there was a market for it, and you try to prepare for it. I think in hindsight, I probably would have looked to have a psychiatrist on board before I decided to do this, not after. And it's not. I mean, in all, I mean that fully sincerely. I mean, it's laughable, but it's serious. I mean, it is. It's real. There's a lot of anxiety. There are good days, there are bad days. Anyone will tell you when you're looking to start up your own business, there can be plenty of days where you're questioning yourself, and keeps you up at night. And so, what I did to try to de-risk was I don't have the funds to, keep me going to fund my own business for 3 years, which is probably what it's going to take to make a profit. And there's plenty of unexpected things that have come up along the way that could even delay that. So I found a partner that I felt I can trust. It's not someone I've known my whole life. I mean, it's a family in Dallas and a CEO. They were willing to give to cover the overhead, and they're not a public company that needs to report their earnings every quarter that I'm going to start feeling like I'm under the gun. At some point I might be, but it's of all the challenges that have come up over the 18 months or so that we've been going, and there've been a fair amount of them. I mean, you look also at the state of the market and the fact that you start during a pandemic, having the financial backing, was certainly, has helped de-risk from the start.
And that's the Crow family, by the way, in Dallas. Trammell Crow's personal holdings. I think Yale even is, the Yale endowment's co-invested with them. So indirectly, we are also funding your startup.
Thank you.
Ira.
Thank you for that, everyone.
Well, let's start with Ira and move this way back, because in the context of what you said, Ira, I'd like to know, what would have been the primary reason that your startup failed, and what would you do if that happened?
So, like right now, if we're going to fail,
Yeah.
what will it be? The Crow family decides they don't want to keep going, bankrolling us. But so what would my backup plan? I mean, I'm 44. Started the business a year and a half ago. I also, one thing that helped me feel like this was de-risked was I tested the market. I didn't, it wasn't the first, opportunity I've had to do something else, and got comfortable that the market was deep enough that if this doesn't work out, I know I'll, go out kicking and screaming, but you need to remind yourself that there was a point in January or February of 2021 where I, based on the knowledge I had at that point in time, was fairly confident that there are other places that would be willing to back a venture like this. And if I go back to being a salaried employee, it's not the worst thing either. So you just kind of, I did it late enough in life to know that I built, I built a network. And that's also another way to de-risk things. I mean, and I'll say, one of the first quick realizations after I left my prior job and announced this is what I'm doing was your network, good people want to be helpful. Right? I mean, I spoke to you and you started listing off the names of people to invest with me, which was great, but I
think I gave you Agya Ventures, didn't I give you Kuno?
I mean, I have docs if I can pull it out and get something signed, but no. But no, anyway, I mean, it felt like there are other things out there.
Okay, and Andrea, I know you've never even entertained the possibility of failure, but...
No, I think that I'm an expert on failure more than anything else. I think that failure is the thing. And in fact, my team says to me now, I'm afraid I'm going to fail. And I always say to them, you got to fail big. You got to fail great. You got to be all in for that failure and learn from it and iterate from it. So I am, in fact, nervous about bringing somebody onto the team who's afraid of failing, because then they're not going to move. And so of the many, and I think there are people in the room that have seen some of my failures, so you can speak to them. But I think that what has kept me going was, one, I feel very compelled by each of the business models that I've created, and they're related to each other, but they can't fail, because the alternative is what? We're just going to not provide education access to billions of young people? No, obviously. So the curiosity of solving the problem I find very stimulating. I also, the different ways, the original question about failure, rather than just talk about failure, was I afraid of failure, or...
What would you do? What would be the primary reason you would fail, and then what would you do afterwards?
The primary reason that I would fail is because I look the way that I look, in every way, and that is the biggest risk to our company, and it would be, or iterations of that. Arguably, my most successful project is a failure. But it wasn't a financial failure. In fact, it was a financial whopping huge success because of the downside risk protection we put in. But in terms of the not having the outcome that we wanted, when you have to lean on your downside scenario, that's great from the investor's perspective, but from the community's perspective, that's not what you want to see. And so that's still a project that we're working out. And and the answer is, you're right. I kind of never give up. That is what I'm sort of known for. So every time I own the plans to this project that's 70% built, and the government keeps saying, surely you have a price. And I'm like, no, I don't. I will finish those buildings because I don't trust anybody else to finish them the way.
This is your project at the University of Ghana.
That's right. And I don't trust anybody else to finish them with the same intentions that we had. So even though we've been paid out enormously and they're 70% done, and I